Building wealth is a marathon. It's not a sprint. Discipline is the key. Every day, 10 to 15 minutes is all we ask. But here's what I'm worried about. Those of you who are not devoting that time, not thinking about this, not using at least your weekly market worksheets, doing practice trades as often as possible, and really honing your skills, are not going to be ready when that systemic market crash hits us. Listening to Jim Rogers, who originally started the Quantum Fund with George Soros many decades ago. He now lives in Singapore, moved his entire family there. And I heard him in a recent interview saying that at the outside, 12 to 24 months, we're going to see the legs come out from underneath this market. Think it might be a great deal sooner. I want you to be ready. If you're not dedicated at this point, dedicate yourself today. If you've fallen off the wagon, rededicate yourself. We need you to be with us. We want to be prepared when this market starts to go down to get out of it and to write it down in very successful either short trades or inverse funds. We want to be ready for that. Now, that's going to be your own decision with your own money. We're not going to call that for you. We're not a stock calling service. We're an education firm. But we want you to train. We want you to use everything we teach, everything else you've learned and are learning, and employ it. We want you to be ready to expect it, not be surprised by it, to be prepared for it. That's what we are all about. I just got finished recording a 42-minute in-depth training session. I want you guys to have it. We'll be putting it out soon, and I'm also seriously considering a 3 to 4 month, once a month training course in depth to help get everyone primed and ready for this. So checking out different suppliers of video services and all those kind of things to get this done. But what you got to do now, be with us every day, 10 to 15 minutes, follow these charts on a daily basis. I want you to practice trade as often as you can. I want you to fill out at least your weekly market worksheet. Those worksheets are available for free in the show notes. If you're not a subscriber to chartingwealth.com, you need to be one. Just go there, put in your email address. We don't spam you. We don't sell our list. We're going to get you the information that you need. Also been recording a number of trainings here lately in my car, and I will be sharing those with you also. So again, get prepared, get ready, train every day. Let's jump into these markets. We see things going splendidly in the directions of our weekly and two-day charts. What do we see with the S&P 500? It is up almost 1% for the day, 0.90%. As it continues to move up, we see the derivative oscillator gaining momentum, price percent oscillator heading up. We see the weekly candle actually above the weekly trend line and getting stronger, moving ahead of the prior week. We go to the two-day chart. What do we see there? We see it pulling away ever so slightly from the red signal line. We see price movement above the two-day, well above the weekly, and again a green candle. And don't forget that last candle represented Wednesday and Thursday. The latest candle represents Monday and Tuesday. Remember, the markets were closed on Friday. So again, we've got a nice green up candle. It does have a little bit of wick on the bottom, but again, we'll continue to watch and see what we see. What did we have happen in the afternoon? We saw up movement in the morning and a crossover going up in the afternoon. The only concern I have is as high flying as the market was throughout the day, well above that, well above the Bollinger Band. So just watch things in the morning. If you want to jump in, wait till 10:30, see how the market's looking, but don't jump in just to get pummeled, okay? If you want to jump into an up trade, practicing an up trade here. But again, for those of you who've been following and practicing, of course, you know as we move from the S&P 500 to the Qs, up the biggest for the day, 1.27%. This trade just keeps going along beautifully. Price movement well above the two-day and the weekly on the weekly chart. Nice green up candle. Price percent oscillator heading up. We can see the derivative oscillator gaining momentum. We go to the 2-day chart. What do we see there? Again, price movement's well above the 2-day and the weekly. Derivative oscillator gaining momentum. Price percent oscillator pulling away from the red signal line. We go to that 4-hour chart. Remember, our jumping in point actually was a ways back on this trade. We had that crossover going up all the way back on the 1st of April. And just high flying, actually another jumping in point after the morning in the afternoon on Tuesday. Things are looking just beautiful as, again, the QQQ, that is the NASDAQ 100, just continues to fly higher, higher, higher. Why shouldn't it with all the stock buybacks, with money at zero, with lots of printing and inflation in prices, when we see the stock market just keep going up, 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 up? Why shouldn't it when you've got all that free money floating around? Not saying that's a good thing. I'm just saying, why wouldn't it be going up when you've got interest rates pretty much at zero for the big guys? So, and negative interest rates, in fact, in other parts of the world. That, my friends, will come to an end at some point, and when it does, it's going to be bloody, it's going to be nasty. But in the meantime, we can sure capitalize on it and do wonderful practice trades, see them go through the roof. It's gorgeous. Okay, going from stocks to 20-year bonds. What do we see there? Bonds up for the day, 0.21%. We do have a down candle still forming, trying its best to cross over, going down. Derivative oscillators negative, price percent oscillators crossing over, going down, going to the 3rd week of red down candles. We'll see how long that lasts. Look at the 2-day chart. Sort of see things flattening, sliding sideways there. Derivative oscillators flat. Price percent oscillators still heading down. Price movement is above that 2-day trend line. We go to the 4-hour chart. And of course, it crossed over at the end of the day. Although it is a red candle, it is pushing through the 2-day trend line. Again, we don't have a trade here. Weekly is up. The 2-day is down. Again, we can't call the weekly, even though it's trying to cross over, going down until the close of business on Friday. We can't call this candle. You don't ever call a weekly candle until it's finished drawing. You don't call a 15-minute candle until the 15 minutes is up. Okay, but looks like it might be crossing over, going down. We'll just wait and see. A little bit of a pullback underway, at least on that 4-hour chart. We'll wait for bonds to sort themselves out. I guess we would say themselves, bonds. Okay, let's go from bonds to, lastly, gold. The only thing down for the day. Gold down 0.21%, just what we wanted. Gold closed 120.12, so $120.12. Remember, I had that weekly vertical crossover going down back on the week ending the 29th of March. And we're going into our 3rd strong week of down movement. Derivative oscillator gaining downward momentum. Price percent oscillator heading down. We go from the weekly to the 2-day, and we can see things. We see that long wick on the bottom showing us again that things really went down for the day. We see on our Heikin Ashi candlesticks a low of 119.55. So again, punching through that $120, in particular that $120.20 barrier, pushing through that. Price percent oscillator heading down, derivative oscillator gaining downward momentum, looking quite nice. What's going on that 4-hour chart? Again, way down in the morning, bit of a recovery in the afternoon. Just keep your eye on things. Derivative oscillators continuing to lose downward momentum, even with that bump down big in the morning. Little bit of a reversal going up in the afternoon. So again, we'll keep our eye on things. Still in a confirmed down move also on that 4-hour chart with the price percent oscillator. So we saw things bounce around, having a hard time pushing through that 120.20 mark, and then pushed through it quite nicely in the morning on Tuesday. That's where we are as we end the day. If you've not purchased our book, I'd encourage you to do so. We're in the 9th printing. Sent out a big fulfillment of orders yesterday. Would love to have you purchase our book if you've not done so. Want to know what it is we do in depth here at chartingwealth.com. We have boiled it all down for you. It is a good read. I am proud of it. We spiral bound it. It's a little more expensive to do that way, but it's a lot easier for you to read and hold open there at your computer as you're studying things, what we're teaching. And I just encourage you, if you want to support us here at our work at chartingwealth.com, it's one way that we have monetized a little bit of the costs for the bandwidth and all the stuff that we do here. We appreciate you being with us every day. If you want to write us, you can do so, cw@chartingwealth.com. If you want to support us on Patreon, you can do that too. And again, thanks for being with us. Commit yourself, recommit yourself. 10 to 15 minutes a day is all we ask. It will be the most profitable time you spend because you will be delving into the market. We want you to create your own printing press. That's what we want the market to be for you. And if you can follow these trends, they're simple trends, but they require some work for you to understand how to get in, how to get out, the minutia of what it is that we do. The big concepts are easy. It's always the little things in life. It's dedication to the little things. I find out that day after day, the things that I do every day that I dedicate myself to, my workouts, my stretching, different exercises, different devotionals that I do, those things, they add up in the long term. It's the little things that count. They're the things that change your life the most over time. And your bad habits are the things that catch up to you also. If you smoke, if you drink too much, if you don't work out, if you eat too much, all those things on a daily basis catch up with you too. So let's invest in the stuff that's going to deliver huge dividends for you in your future. And that is spending 10 to 15 minutes with us each day, day in and day out. Again, building wealth is a marathon. It is not a sprint. Discipline is the key. Discipline is one of the things most lacking in most human beings. And if you can discipline yourself to this, my friends, you will win. God bless. All the best from the whole team here at Charting Wealth World Headquarters.